All right, so here on TradingView, I took a trade on the S&P 500, and this is also not for I'm not a financial advisor, but this is for educational purposes. This here, let's see, I was already making my chart pattern. So today, today was the 28th. So from here, we had a gap up. If you can see the gap up, but it was kind of, oh shit, screen keep timing out. So so we got the double hump, boom, boom, a little more, well, a little less, I'm sorry. So we made a lower low. Well, actually, yeah, it did. It made a little slightly, that wick, it made a lower low. And then the went from a higher high to a lower high, from a higher low to a lower low, and then we had that kick up. It was a pump and dump basically, because you can see it starting with the day pumped, boom, we hit a resistance. I already had my like I said, I already had a line drawn from the other day, because I always try to connect what was my last red candle from from a resistance point. So we got resisted here, boom, it came back up, resisted again. So I drew my line from that red candle to that red candle, seeing that they were touching. That's how I was able to see that was a pattern. I just didn't get in on it, but a good buy would have been here. If you would have went in on a call, and then come up here and sold it. You would have had to hold it. It would have been a good day trade or a good swing trade. Because from yesterday, if you could have got in right at that point, then that next trading day, would have been a swing trade, and just let it go at the top here. So we met a resistance. It started coming down here. That's when I started watching it. And we started making another step down, and then somewhere around here in this candle, I got in. Then we came on down here. I seen this push down, and I sold it right around that area where I have the indicator, where I had the circular indicator. And so I didn't go back in to buy, because I could have got in maybe here where the green candle meets the red candle, and got in on another put and seen it drop down more. See what I'm saying? It would have brought some more money. But it was a pretty good downtrend play for the day. Because I mean, really, it was pretty bearish. pretty bearish. And then we can go in on, let's see, we'll go in on Robinhood. Check Robinhood. Today, I just so happened to get up to 1:26. I was at 103. I did go to the gas station. So, you know, balancing your money out, you know, balancing your spending versus your investing is quarter key. But you need to be able to allocate your funding and move them around once you get to good. Once you get to good standing. But I had gold membership on here. Robinhood's pretty good, man. Robinhood's pretty good. Some folks, they be making their little complaints. I really can't complain. Robinhood has a debit card. They also are coming out with a credit card if they haven't come out with it already. I also follow another guy on YouTube called Tech Conversations. So shout out to Tech Conversations. I mean, man, I watch him a lot. I watch Jason Brown a little bit. And those guys there, man. I started. Really, I got into the market 2016 with TD Ameritrade. Was on my first account, but I wasn't able ever to do anything with it. So I didn't really start seriously trading like a couple years ago. And my thing is that you just have to get in the market. You got to get in there, be confident, study chart patterns. You know what I'm saying? Study your chart patterns. Know what you know what you're getting yourself into before you just, get over and sign up. But most of them was commissions free, but now it's like it's a small little fee on options trading. So you do have to go through a thing of, if you were to sign up, I'd send you a link, or you're free to go into the description below and get that Robinhood link in my description. Also subscribe to watch me or follow me. This is a small accounts challenge. And like right now, this is not a cash account, in which a cash account, if you have the money, then you can trade as many times as you want. But having a margin account or having a gold account, you can't do anything but make 3 trades a week. because it's not a cash account. So my Robinhood account is really my gold account. I just had it cut off. Let's see, try gold, in which they'll pay you, I think it's 4%, 5% interest on your money. There's sits on the brokerage. You don't even have to purchase any shares or stocks. See, this will show where I have, if I have any cryptocurrencies or anything, if I own any stocks, it'll show that. So I made this listing: stocks to buy, gold and silver, ETF picks, puts and calls, small stocks, dividend. Options watch list. I don't have anything on my options watch list. All of them ran out. And that's the good thing too. I also like about Robinhood, because you can sit up here and you don't have to actually purchase the option. You could put it on your watch list. Like, let me go here. Since we were trading on SPY, traded on SPY earlier. Okay, so we can see SPY is down. They had a long down. And you just see by the line chart. This is not a candle chart. This is basically a line chart. But you can see all the sharp down play. We had that sharp burst up. And that's when the market started down playing. You can watch the time frame. You see the time frame, it just started down playing. You know what I mean? But that would have been good, man. Get in up here and fucking watch that bitch go all the way down here. Like, so in your account, and if you check this out, see here, buy order, buy in dollars, review order, telling me how much buying power I got available. Let's see, trade, and that's where you go add the list. Okay, trade SPY options. So these are your options. These are your options here. Just go to your share price right there. And normally, because I have not bought any stocks, I have not built up on any shares in any company, you would normally, a lot of people like to sell against the shares that they have. And even though it looks like a minus, they'll pay you. They pay you this amount of money in your account. Like, let me see. I think if I'm selling the call, then I'm saying that if I were to choose a strike price, these here are your strike prices. if I were to choose one of those to an upper, knowing that it would hit that price, then I basically am obligated to sell whatever number of contracts that I have purchased with options. Because when you're doing options trading, you're basically purchasing a fraction of the shares at a certain price. And basically, you have the right to 100 shares. You have a right to 100 contracts of that share. And the expiration date, matters. See, 3 days, 4 days, 5. You can go all the way out. 2025 of this shit. And basically, that's just how long you're gonna hold it. How long do you think it's gonna take your option play to work itself out? Because this is a 0-day contract, meaning if I bought that contract today, that's when it gets sold, on the same day. But now they got the rollovers, so you can roll that contract. You might have to add money with it if you want to hold it. Think it's gonna make money later. But this is what I've been doing lately, is buying. So I ain't gonna get too off topic. So I've been buying calls and puts, and that's the simplest thing you can do. So basically, the money that I have in my account, I will sit there and buy a call or a put. A put is basically saying that you think that's the share price. So if I were to do a put, I'm thinking that it's gonna go down. So there go the share price. Okay, so there's a share price right there. So up under it, we're going buy a put. Then anything above it will be going up in the money. You would be basically adding, well, let me say this. The deeper you go into the money, the more expensive it is. So you're going into the money. Meaning you digging deeper in, trying to get a better break-even price. So where your break-even is 545.21. And okay, so if I were to buy this put, here, which you click on it, it's gonna give you the stats of that option. Which I can't see none of the delta, the gamma, the theta, the vega, it's not here. Oh, but because it's a 0 day, it's a single-day contract. But so that's not gonna show up. That's why the delta and the gamma not showing. But let's see. Okay, so if I'm up here, right, and I buy that put for 547, then basically it's at 545. So if we went up, hold on, let me look at this. I put from 19. Oh yeah, and the cents. So if it says $0.19, 19 actually means $19. So that 1 cent actually means that's $1. So it's $1 for that. 543.99. So it's gotta actually get to 543.99 to break even. But this is like a 0 day, so let's change up to a 3-day contract. We get some better. Okay, now you see all the numbers change. So those numbers changed up on it. Okay, so now let's get it. So look, if I were to buy this put here for 546, but that's up in the money, up in the range, and we're already at 545. It needs to get to 544. So that price breaks down to 544. You're breaking even, and you're adding. Let me see. Yeah, it's not even showing there. It's not even showing the delta, the gamma on this one either. I'm not sure why. But you have different options, and basically these are your strike prices. And whenever you're doing a put, anything above it is going directly in the money, or you either here and then you're going away from the money. As you can see where it gets more expensive going up. Now we go to calls, because the puts is when you think that the market is going to go down, basically. So if you think that it's going to lose value, you think it was going to go below 545, and you're going basically to buy, and you're going to puts. So, I mean, it's pretty simple. Then you're going to go here when you think it's going up. Simple. Buy and call. So the calls you think is going to go up. So it's just basically opposite. See, I don't need to have any shares or anything to buy, options of these companies. So, okay, I think it's going to go up 545. We got one that's 546 for $95. So the more you go up, you're going away from the money. So you'll see it get cheaper. I mean, look at it, $19, $18. And Those are pretty low risk as far as capital. Those are low risk options. $33, $58. When people be asking questions like, man, how much you gotta have? Here we go. $95, $146. So going into the money, we'll be going under. So then it'll get more expensive because these basically pick up on more movement. See what I'm saying? We can move at least $1, that's $44. So if it, the closer to your strike price it gets, the delta will increase. So we can say 0.44 maybe is like near $44. Every dollar movement, the gamma will increase, which is feeding into delta. The theta is your time decay. So time decay basically 0.35 could be $3.51 a day, and that does increase. And Vega is your implied volatility here. Rho, we really don't never worry about Rho. I guess maybe Rho is feeding into Vega, which is the time, which is the well, Rho may feed theta, but Vega is the implied volatility, which is here. And the implied volatility, you also want to watch that too, because a lot of people be thinking, damn, how is my contract losing money so fast? But this is just a tester of the volume of the option. So that's basically how many people are interested in this contract or are willing to purchase this contract. So if it loses 1%, then you're risking by losing $18 or so, maybe $1.80, somewhere around there. And it's got a pretty low implied volatility, really. But that's going based off of, you know, the interest in the contracts. But that's just the basics. That's just the basics. You know, because there's a different strategies that you can also work. Those, I'm just telling you the simplest, buying calls and buying puts. But you know, you can buy multiple calls, you can put multiple puts together, you can create iron condors and iron butterflies, and it's different strategies. And I haven't gotten into all of them because basically I'm more of a charter right now. So I'm always charting. Also, like I said, I love Robinhood because it comes, you get a debit card. You can spend that money, you can trade that in a day and spend that money. Within that day, you're able to use your credits within that respective time. So alright, so what is it that I wanted to say? So anyway, going back, Let's go to accounts. Go spend investing. I believe that's it. So instant deposits, withdrawals, withdrawable cash, margin investing. I didn't get into the margin investing, which the brokerage account, the brokerage that I'm with, they'll basically lend you money to help you with your trades. But I'm not into that right now. You gotta at least have 2,500. You gotta at least have 2,500. As you can see, I got two out of 3 day trades. So, I can make a third one. But then it's gonna be it for the week. I have a rotation cycle. So be mindful of that. You don't want to pattern day trade. Be a pattern day trader, because then you'll be in the blicker for losing your account. So you don't want to lose your account. And then stock lending. I don't do the stock lending right now. I was trying to get to where it says the options trade. It should say options trade in here. Part statement, tax center, history, rewards, investing. And that's just the news and stuff, huh? So those news marks be pretty helpful sometimes if you take your time and read. I cannot seem to find that part because I'm used to doing it on my phone. But I'm trying to find where because I would have the part that I went into was supposed to be where they tell you about your you get an IRA account too. So that's pretty good. And I can't add an account. I was looking for that, so it's good. I know I can add an account now. And account notifications, spending. I'm not seeing it here. I ain't seeing it. Normally you'll see where it says options trading, retirements. You get rewards. Invite friends. Pick your free piece of stock. Get up to 200 in stock for every referral. Limitations apply. You see what I'm saying? So. Earn fractions shares. We slice whole shares into smaller pieces of stock. Limitations apply. Get from $5 to $200 in stock. Everyone gets stock. So when you have somebody to sign up, it doesn't matter if they open their account with $10. They will get a free piece of stock, ranging from anywhere from $5 to $200. And then the person who link they used will also receive free share from any company. Sometimes certain companies on the brokerage will be doing their own little promotion. So look at all these companies. Look at all these. Look at Chevron, all that shit. Man, don't NBC, whatever that shit. Cat, look at Cat. Look at that's the lamp. I forget the Harry's or some shit. And then Ford, Apple, Microsoft, Google, Amazon, Nvidia, Tesla. I forget the B&H, but I know it's on my tongue. I don't know what the L is. Visa, Exxon, Walmart. You know what I'm saying? It's just some of them. But I cannot get to working. Profile, transfers, crypto. You also can purchase crypto. Transfers. I am looking for options. That is all I'm looking for. Because I know that people be like, well, how do I go in and trade options? Because I'm looking around right now. I'm not used to the desktop. I just had to remind you. Investing. Well, the laptop, I'm sorry. It was on the laptop. I'm just looking for this where it says it should have said instant deposits, withdrawable cash, dividends, stock lending. Disable cash sweep program. It's really supposed to say options trading level. It's not even telling me what the options. It don't say nothing about options trade. It don't even say nothing about options trading. But I know that over here we have this. Okay, here we go. So I had to actually over here in this section, you see your day trades. A day trade is when you open and close the same stock or options position on the same day. If you place 4 or more day trades within 5 trading days, and those day trades account for more than 6% of your total trade during the same 5-day period, you may be permanently flagged as a pattern day trader. This can lead to loss of access to stock lending and cash sweep and may result in a day trade restriction in your brokerage account if your portfolio value minus crypto is below 25,000. So let's see, day trade settings. So yeah, I got, so my account is individual account, and you can trade out of your Roth You can trade out of your IRA account too. If you see it big, it can grow inside of there. Pattern day trade protection, that's on. That's just basically to give you a warning whenever you get close to that. Day trading, there are ways around it. If you swing trade, which means buying you can buy a stock or a stock option one day and hold it till the next day. Or, just like I showed you the expiration dates, those dates go all the way out. So to like a year extension, which is called a leap option. So what it is they might not, have these different extensions on it. So that would be considered as a swing trade, so it don't count as a day trade. So that don't count, never count against you. Is when you make a trade and within the same day, and you make 2-3 trades in one day, you just basically used up your 3-day trades, Individual. So you probably would come here. This how you would cut your I got up to level 3 options. So I can use, I want to remove my options trading. But if you came to this section, it'll probably say something like apply for day trade, apply for options trading. And then it's basically gonna ask you some questions. How much is your net value, your net worth? And I put a good amount, 100,000 or something like that. Then why are you trading? Or how long have you been trading? Put at least a year or 2 years. You want to put at least 2 years if you got it. Because I'm trying to tell you how to fill it out to get approved. Then you basically wanted to sound good, but feasible. I always keep it at $100,000 limit. How much are you worth without such and such? You might put like 59,000 or something like that. But your net worth, your cars, your house and shit like that, 100,000, something like that, whatever. How do you get your money? You can put through savings, through work, if you're working. If it says, do you have any dependents? You would put 0. You'll put 0 dependents. You would, like I say, how long have you been trading? At least anywhere from a year to 2 years. How good are you at options trading? Very good. So you're basically trying to get your way into trading options. And then they'll approve you. It's not hard. It's not hard at all. It's not motherfucking hard. I'm trying to think of what other questions they may ask, but it's not much. And you basically fill that out, and it'll say options trading approved. And if you're having problems with it, you're welcome and free to email me. If you want to join my group, I have group on Facebook called Online Cash Adventures. So it's Online Cash Adventures on Facebook. Where I do watch the market. I get into the patterns. I get into the charts. Because a lot of time I can go off of, I have 3 favorite indicators, and well, yeah, those, I mean, they're actually indicators, but they're like symbols, like I got the horizontal line, I have my circles, and then I have my, so those are the only tools I use on there, on my trading view account. I only use 3 symbols. It don't take me using all the Fibonacci and stuff like that, because sometimes I haven't brushed up on those more advanced symbols, but those 3 symbols, still I can make do. I'll be making do with just those 3 symbols. My horizontal lines, in which I can always draw out my support and resistance, because that's very important. Once you get your support line, you'll be able to tell if something's going to break through that support, if it's being touched more than twice, or it may reverse back to your resistance. The resistance line is when it gets to the top, and you can see where that candle goes from green to red. So it's resisting it and it's going back down towards your support. So you gotta know how to move it, or know the moves that it's making. So the trend is your friend. You're following the trend. You're not trying to go against the trend, or oh, I think it's gonna go this way, even though it's easy to do that. It's easy to say you think it's gonna go away, but once you realize the factorization that goes into it, then you'll be less emotional about trading, because you'll realize, you still gonna get a little mad if you go to losing money, or if you made a mistake, or you know what I'm saying. You basically want to get to be more in profit than losses. So once you get the gist of that, you'll love it more. So I'm about to start getting into the more small cap stocks, because I've heard of a couple of guys coming up off the small cap stocks. Like this shit, not even, they become millionaire traders, shit like that. You can't be stopped. Hold on, let me get this get these blunts out real quick so we can continue this continue the lesson here. right? So now we want to check back into it. So this here is your volume. So that's your volume indicator. But also Robinhood has its own. I hate how fucking slow this goddamn tablet is. Them fucking breaking news be coming through too. Scammers breaking those scammers out. Goddamn moving. Shit, taking the time. Boom. Yeah, throw it all in there. Alright, so just as I was showing on the laptop, but this is a mobile app, so this is what it looked like on your phone or something. And I just want to basically show you what their charting looks like. I hate all this fucking light, man. It's bullshit. Fucking bullshit lights. Alright, so we fell, basically, it fell $2.28 today. Alright, so we got $1.03. After hours, we went up $1.03. Because I think it was down like 5.44 or something. So this does move after hours. It'll make moves after hours, and that's one thing. That's why I kind of the swing trading activities is something that had to be perfected, because yeah, we have overnight movement. Stuff like that. And then once we go here, this is going into a more advanced chart. This is just telling you about the company, you know, a little information down. Okay, so now this line, 200 day moving average. The peach line, 50 day. This little blue line here is the 10-day moving average. As you can see, 10 day. So they just help you keep track of how many days between that is moving. Then what we got? And you can touch it, bring your markers around. Alright, so now here we go. This is the relative strength indicator. So this is basically telling you when this shit is overbought or oversold, and this is when it's underbought. So once we go under these beads, see how this you hit down here, that's underbought. So at that rate, that's danger. I mean, that's in the process of maybe having a build up. So boom, they built up, they caught their volume down there. It came back up and shot up here, back to an overbought. Then it had to come down some, come down, boom. Come to a bought zone, into a buy zone. Here, boom, 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 bent down. So we hit there again, hit to the bottom. There's another, it's still a buy. A little buy, boom, still a little buy, came back down. And then you kind of can go up here, trace it back up. You see how it's making those certain moves. That's basically following it. So it's letting you know what the relative strength of the overall share is, how the shares are doing. Then down here on the MACD, the MACD indicator is basically all the red is puts. So you remember I went through explaining about puts and calls? The green are the calls. So you got to start to thin out. And so sometimes you can track that. So then you got to work with your indicators, knowing it's in the green here, and trace up, boom. That's where you got that volume that kicked it like that. That made it hump. So therefore, your people who went in right here on the calls came up, got that money. It was right around the same thing. See what I'm saying? So I traced that down all the way down, boom. That's when it started. They hit right there and went on up. Then they started selling off, went into them puts, boom. A little bit of calls picked up on it, boom. Because it was dropping, the market was dropping. So it would have been good to buy a put up here and let that son bitch drop all the way down here before the day was over with, and boom, that would have been a good ass day. And you got your week. Go out a week. See how it changed up. See, 1, 2. It looked like it touched that line. 1, 2. That one came down here. 1, 3, and bounced back up, juicy. 1, 2, 3. 1, 2, 3 touch. Normally, if you get like, this is what I mean by a support. This is your support, so it can break through. If it breaks down up under that support, you got a down play. It was already a down from here. So this could have been somebody's support. Their support could have been up here. And boom, it touched it. Boom, it came down, touched it, broke through. It fell through their support. So then this is the new support right here. Because I'm going off of this wick. That's the support now. And you got a little resistance here. So what that look like? It may be a pop up. It may be a pop up. I can't say for how many for how much it's going to move, how many dollars it's going to move, but it's definitely going to make a move. And so another thing, so trading the SPY, you also want VIX. You want VIX right next to it because VIX basically measures the SPY. So if SPY is going up, the VIX is going down. So you see it at 1087. If you see VIX go 11, 12, 13, 14, then the market is finna take a drop because the VIX is going up. So that's why these two be right next to each other. And also when you trade in SPY, you can trade the Dow too, because it mimics and it kind of moves along with the S&P, just giving you a little juice, you know, for your thirst, because you could make more money. Say if I went on a call knowing that they were gonna go up, you see how it kind of mimic each other, how they both went down like that, the QQQ, boom, all three of them. If you slide some money in all three of those, right, which would be like 3-day trades, you gotta remember that. Then you can cap off all that. Depending on how much money you got, you can also purchase multiple contracts. When I walked you through the options, like, let's go to NVIDIA. Let's go to trade. Let's go to trade options. Trade options. Just a call. Alright, so let's just see something affordable, because you see those are very high numbers. That's $1,000, like $1,015. $1,015, $970, $915. NVIDIA is expensive, buddy. Even if you was trying to get into the, okay, so there we go for the 123. That's where they are now. Okay. So if I wanted to purchase multiple, going to the buys, you see how I say one? So one contract will cost me $152. Let's see how many two contracts will cost me. Two contracts will cost $304. So I would be risking $304. You gotta see how much you gotta move. So this gotta move they gotta move 5.79%. 5.79% expected profit. It's telling you the number. You're gonna calculate that. And that's just with two contracts. Let me see. So I'm trying to look around, trying to see. So you can get multiple contracts. One contract is worth 100. Is basically 100 shares at a fraction. So you have 100 contracts. One 1 times 100 is 100. Well, it's holding a fraction of 100 shares, basically. So this shit gonna hold 100 fractional shares. And then that's basically what you go off of. That's what you trade. I'm getting into the futures. I mean I am gonna be doing futures trading, but I'm also doing check this out here. Check this out here. Come up here, click your magnifying glass. This is where you can put the ticker symbols. Ticker symbols are short acronyms for whatever stock you're looking for. And then I believe they got they should have the well, this market. But yeah, you click the little magnifying glass and then you can just search. You can search stocks and stuff. I'm looking for where they have the where they have their own little setting here. I got the 24-hour market, daily movers.
It rained.
Yeah.
Oh, that was
Because I'm able to go in and I'm able to go in and